This is Jim Emter, Van Ahn Co, Alexandria, Minnesota, with their closing grain and livestock comments for November 8th, 2019. Corn market up 2 to 2 3/4. Soybeans down 5 1/2. Chicago wheat down 2 1/4. Minneapolis wheat down 1/4. Kansas City down 3 1/4. On the week, we saw the corn market down 12. Soybeans down 4 3/4. Chicago wheat down 5 3/4. Minneapolis wheat down 12 3/4, and Kansas City down 4 1/2. Really was just kind of a week here where we need to get by a USDA crop report. There's uncertainty yet on the China-U.S. negotiations, but let's cover that crop report just for a second. When you look at the corn market, they came in here. They basically gave us a carryout level that was pretty similar. They did take yield down 1.4 bushel, but they also took demand down 25 million bushel in feed, 25 million in ethanol, and 50 million in exports. So at the end of the day, we're left with around a 1.9 carryout. That gave the corn market some optimism and built into some strength, but faded back a little bit towards the close, but still a higher day nonetheless. Price counts remain at around this 371 as support for December corn, with resistance up to that $3.92 to $4 mark, which we still feel is in play for a seasonal rally as we work to the latter parts of November into December. So again, we oftentimes bottom out here in corn over the next week or so, and then start to build back into another rally phase. Soybean market, on the other hand, we've got a base of support. Yeah, we faded a little bit today, but the market was caught off guard by USDA punting for this report. The only adjustment made from USDA was a crush number that was taking down 15 million bushels, and at the end of the day, we're left scrambling. U.S.-China negotiations still going to be the big nugget here as we work to the latter parts of November and December. Obviously, a trade deal there could get us up to the higher price counts, which would be around that 958 to really 970 mark. Support right now, 913 to around that 924 area. When you look to wheat, there was a bit of a reduction there in harvested acres. That came as a result of spring wheat. So we do look for spring wheat to gain on Chicago and KC here as we work ahead. That was a good report for that type spreading. But there is risk with that, and just kind of a point of notification. When you look to the feeder cattle market, steady to up 22 1/2. When you look to the week, we were down to 12 1/2. Live cattle up 25 on the day on Friday, but on the week down 0.27 1/2 or 0.275. Hog market mixed really on the day on Friday, down 0.325 on the week, so 32 1/2 cents. When you look there, cash cattle 113 to 116 live base, dressed at around that 182. So we've seen good cutout levels, good cash. But exports were a bit of a miss this week, so we're trading between second and third price counts. Just an importance to kind of keep an eye on that relationship there. As we look ahead, we basically want to see some marketing here for our producers at these levels, just to take the edge off to some degree. On the hog side of things, you're basically looking at the cash that has kind of settled in around the $60 off the spot. We've basically got exports that were a miss this week, and that's why you saw the hogs somewhat limited. But again, very dependent on the China-U.S. negotiations. This has been Jim Emter, Alexandria, Van Ahn Co. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great weekend.